It's a sunny, bright Wednesday up here in northern Israel. And what is happening on the Bitcoin and crypto markets as I take a constitutional walk, as they say. Well, Bitcoin and altcoins, if you look through them, you can see a lot of the daily time frame volatility. The indicators, like the alpha volatility radar and variance, and entropy, returns oscillator, are a lot of them showing you slightly mixed, but overall upside indications, showing you that the day at the moment currently still looks like it's going to end to the upside, and we've already seen a nice little bounce so far on Bitcoin, but you should always look to lower time frames for the actual changes in the volatility and correlation, or entropy and correlation, or returns and correlation, because those are the things that will most reliably tell you what is happening and where the changes are happening. So overall, if you're trading low time frames, as you ought to be if you're actually a trader, or I should say, as you probably ought to be if you are actually a trader, right? Then you'd be wanting to look at those lower time frames. There have been plenty of, ups and downs already on the day on low time frames. Plenty of longs, plenty of shorts on low time frames. I'm talking, 15 minute and under, and generally like 9 minutes, 6 minutes, 3 minute, 1 minute. Right. Again, why do low time frame traders trade low time frames? Well, because you get more occurrences of opportunity on low time frames than you do on higher time frames. Right? You're going to have more instances where the volatility is low and the correlation is high, or the volatility is low and the correlation is low, or volatility is high and the correlation is low. You're going to have more of those where they're both high. You're going to have more of those instances on low time frames, right? Where you can get in on a trade to go to one side or the other based on the indication that you get from those primary leading information indicators. At the moment, if you look at the big picture, I know there's a lot of jibber jabber in the peanut gallery and the echo chambers of YouTube Jimmy and X crypto or Twitter crypto, whatever it's called, where there's a lot of people saying Bitcoin hasn't bottomed out yet. It's going to go down to 73. It's going to go down to 70. It's going to go down sub 70. Look, if you're a low time frame trader, it does not matter. If you're a volatility trader, if you trade the VEPs, you don't care what direction the price is going. It doesn't matter. It doesn't matter if 50 goes to 50, Bitcoin goes to 50,000. It doesn't matter if it drops to 40,000 or 30,000. It doesn't matter, right? What matters is that you're on the winning side of the trade the vast overwhelming majority of the time. Okay? That's how you become a consistently profitable trader. It matters that you take your profits early and often. Don't be greedy. Try to stay in the trade and think, oh, it's not going to go against me. It will go against you. Returns distribute and returns mean revert. Regardless of what direction you're trading, the asset will at some point go against the direction you're trading. Right? You might be in a winning trade. It's going to go against you at some point. And if you don't get out, you're going to lose some or most or all of that profit. And you could even end up in the negative. And you don't want to do that. People often ask me when I'm trading, do I stay in a trade if it goes against me, or do I get out quickly, like immediately? Again, as always, I always tell you, I get out immediately. I don't wait to prove how wrong I can be. I don't wait to hope that it can go back up or hope that it can go back down in my favor, right? And I buy and I sell with neutrality, meaning I don't care emotionally about which direction the price is going, because it's completely irrelevant, right? What matters is growing my P&L, not proving that I could, only long or only short, and I could hold my trade until it was profitable. Why do I need to hold my trade until it's profitable? That's dumb. I'd rather get out of a trade that's going against me without losing anything. Maybe I lose 50 cents or $1 or whatever. The moment I see it tick against me, right, I get out. I don't wait even a minute. Right? If it goes against me, I'm just out. Right? I'd rather get in the trade when I see it's going in the direction that I want it to go, and stay in that trade for a fairly short amount of time. Very typically anywhere between 1 and 15 minutes. Usually not more than that, and usually it's not even anywhere near 15 minutes. Typically it'll be like 7 minutes, 5 minutes. Sometimes you have a good run and it'll go up 15 minutes or something, but at some point it will go against me. Hold on,